so I don't look down. Every single one of you.
I want you to deal with your problems by becoming rich.
I can't even see you because I don't look down.
I'm not leaving. The show goes on. This is my home. They're gonna need a wrecking ball to take me out of here.
Don't look down.
Good timing, everybody, whether it's morning, evening, or in between, wherever you are in the world today. Welcome to unRekt Traders. Before we begin, please hit the like and subscribe and join us to share ideas, strategies, and learn together to make better trades. This is not financial advice, nor am I a financial advisor. This is strictly my thoughts and ideas, so let's get that crypto. Hello everybody, today is June 2nd, 2022, and today we're going to take a look into the crypto winter of Bitcoin. I've been wanting to do this chart for quite some time now, probably back into March. However, I've been pretty busy with the Discord server and getting things organized and lessons and stuff like that for the indicators, which we will go into a little bit, kind of fulfill the prophecy of what we're looking at here. As of right now, we have to determine whether we are in a accumulation or distribution phase, and that would be right here. Now historically, if we look back, this would be distribution, and then we'd have our drop down from there. If we look throughout history, we have our ascension cycle, all-time high, drop of 86%. Again, accumulation right here. So there's our accumulation phase. We have our ascension cycle, all-time high. From the all-time high down, we're looking at about 84%. Again, a little bit of a shorter accumulation cycle, but we do have one. And then we have a little bit of a mini cycle before coming back down. We have our cardiac arrest area right here. And it does come into the accumulation period before taking off into the ascension cycle. And now we have to determine whether is this distribution or is this accumulation. I personally believe this is distribution just based upon historical past. And what I have done, let me just load up the crypto winter here. So what I've done is I've taken the angles as well. So the trend angle from the all-time high of 2013 down to the bottom. If I take from the halving to the bottom, we're looking at 18 bars or 547 days. For the 2017 cycle, I took the all-time high, trend angle down to the bottom, which was 3122. Again, from the halving to the bottom, we're looking at 517 days or 17 bars. Now, these are, again, monthly levels, so they're not perfect on the dates, but this is what we're going to use. And again, ascension cycle, possible accumulation or distribution. For now, we're going to say it is distribution until we break the all-time high. But if we do take the trend angle from the all-time high, try to find the bottom based upon the halving with the date. So we go 17 bars back, 517 days. Gives us this green line. The 49 degrees, 49, 49. Come down with the angle to 49 degrees to the green line. And we come up with a price of 10,033. Now if we take the date from where we are now, from the month, we're looking at 6 months to come into the bottom, which would take us to about Christmas, 183 days. And if we look at each green line of when the bottom was, we're looking at Christmas, Christmas. So they seem to really like the Christmas as the all-time lows for the cycle. So we'll see if this one does play out to be the same way. All right, coming into this chart, we have the golden pie on. Now if we go back throughout history on the golden pie, this is the 111. Fib 2 here is actually the 350. So anytime the 111 crosses over the 350, typically 2 or 3 days afterwards, we get the short signal and then we begin our drop downwards. Again, same thing here. The 111 crosses the 350, get the short signal 2 or 3 days after, we get the drop down. Now in this instance here, we do have the 111 come over and cross one of the negative fibs, which is this yellow line here. We do get the long signal, we get the ascension cycle. Again, short for 2017, 2 or 3 days after, we begin the drop down. Now here we do almost have the 111 cross that lower yellow negative fib, and it just wasn't enough to give us the actual signal, but it was more or less there. And then we begin our mini cycle here, come back down, and then we have our ascension cycle back up to the 2021 first high that we got. Now the 111 did cross that 350, we got the short signal, came back down, had another all-time high, and then from there we've been continuing down. Price is at the first negative fib. You know, traditionally it's come to the second or third even. Here it came down into the fourth. And if it did come to the fourth, then we'd be looking at the 14,800. Now we know from this level here that we're kind of looking for in and around 10,000. Now if I do throw on the 2-day bottom, the 2-day bottom is based upon the 110 and 240. But as you can see, when the 110 crosses that 240, it does call the bottom perfectly. Same thing as here, 110 crossed 240, called the bottom perfectly. And as of right now, we are getting pretty close. We would need price to more or less kind of come up into around the 37,300-400 level, maybe even higher, for this to kind of turn around before we could really push down and then get the true bottom. You know, I've been watching this quite a bit. It's going to be interesting to see if it actually calls a bottom here. It's exciting to watch, to be honest, if it will, and if that will be the bottom. It is getting pretty close. All right, so taking a look at the 2-year max, which is the 2-year moving average. We go throughout history. Again, it's called anytime we've gotten above into that red line, you know, you can start DCAing out. Same thing with when it comes down below this lower green line, start DCAing in. You know, they've always predominantly been excellent buy areas, especially for this accumulation phase. You know, here's our sell period for 2017. You know, DCA out. Once it crosses in the green, start DCAing in. Nice little accumulation phase here. Again, same with the cardiac arrest here. And then here we didn't quite make it into there. You know, we did touch the top of this red one. And now we're back down into the green as a nice little buy area. So that's an interesting chart. You know, it can make trading quite easily. You know, if you did sell, even if you did sell here, bought back in and bottom of the green, you know, 32% short. And then from here, buy in for the first time. Would have got a little tricked up here, but you know, you're still up 31% when it comes back in. And if you did sell at this red, you're looking at a 970% move. And then over here, we'll start from the first green then to the first red, which is here, looking at 1300%. So, you know, if you just traded this one chart, I think you'd probably still end up being quite happy. You know, you're looking at 4 years in between each cycle, but can't really sneeze too hard at 1,000% profits. All right, so let's take a look at the stock to flow. And on stock to flow, historically, the colors are orange and lime, I guess. So orange, lime, green, aqua, blue, and then dark blue. And we are forming the same color format as of right now. We are in the aqua. Take a measurement of the aqua to the blue. We're looking at 28 bars. On this one here, approximately 28 bars. So we do 28 bars on this one. And we take our vertical line, put it there. Now from the time it changes to the time it actually drops is about 9 bars. And on this one it was, let's say 6. So we'll do 7 bars after here, which would be about there. Draw another vertical line on that. So from the current date to when we should expect to drop, 50% is going to be 11 bars, so 77 days. So basically 11 weeks. That would take us into August. So in August, we should expect about a 50% drop. And that 50% drop, if we take the average from here, we're looking at 17,600. So we could easily drop, basically right to the all-time high here, actually. And that would give us a little bit of a support in this little range here. And that would likely be our first drop down anyway from where we're at. If we look at the higher time frame levels, which we can do right now actually. And I'll go up into the monthly so they're a little easier to see. And we'll get rid of these vertical lines we just drew. Now a lot of these are off of the 3-month, and if I actually go into the 3-month, you can see them a little better from how I gathered them. Again, nice level here. So down into the monthly. Once we dropped below this 28,900 level, which is right here, there's nothing's really supporting us again until the 19,600. And if we drop through this candle, then we're looking at the 13,700 level. If we look at these two candles, there's nothing, they're imbalanced candles for the most part. There's nothing holding this structure up. Nothing's retested these levels. So there is a high probability that we will drop to that 13,800 anyway. And then the next level below that would be the 10,000 level that we're kind of looking for off of this chart here. And that brings us to that 10,000 level. And I think that would also be our, so the 84%. Now a lot of people are expecting even lower to the 90%, which would bring us into around the 6,000 level. And again, that would be this level here. And it's not a horrible level to return to, 6,400. I think that's it for here. So that's it for this chart. I'm going to go into the machine suite. And I did just finish the lessons for this. So the lessons are in the Discord server. But more or less, we look at two charts, one with Bollinger Bands and one with the quasi on here. Now the quasi itself is basically telling us that the 10 is low. It could stay in trend. Otherwise, we'll have to get above the top of the 100 Bollinger Band, which is at 32,000. And I think we'll do this. So there's the levels for it there. Now, if we do get above that 32,000 level, then there is a high probability that we could actually come up into the 44,250 area. We do have a possible target down here of 21,500. And the reason why we have this target is because the 50 average here has moved into the range. The range starts at 100 and goes down to minus 100. So it has come into that range. There is a high probability that it does want to come to that level, 21,500. If this 100 can come in, then it's going to want to come down to the 11,700 area. Now it hasn't come in right now. It's borderline between being support and resistance, hence why I have support resistance here. What was interesting about this candle is the 100 was technically above the range. When it wicked down, it came down to the support here on the 20 Bollinger Band, the lower part of it. And a couple of days before it closed, I was starting to question I was starting to question whether we were going to get back above there, because it was only 2 days. We were looking at, you know, a $3,000-$4,000 move to get back up. You know, I was starting to lose a little bit of faith in the indicator, to be honest. But sure enough, the last 2 days it lifted right up, and it closed above the top of that 100 Bollinger Band, proving that price couldn't go below the top of that Bollinger Band as long as this was above the range, other than by a wick, and that's exactly what we got. So it showed the true power of the indicator, which was actually very awesome. We're going to take a look into the higher time frames, like on the 3-month. Let me remove these target levels. Now in the 3-month, we look throughout the history of Bitcoin. You know, we broke out into the trend. We started trending here on March to April. We went into trend, continued in trend all the way to basically January. Started January, we started to work our way down to the 10, which we got. The 20 came into the range on, you know, July 18th or so. So we did come down to that 20, found support off the 20, came back into like a mini range for 2019. And then from here, basically April 1st, we came into trend of 2020. Continued in trend. You can see that the 20 was well above that range. Came down, hit the top of the Bollinger Band, wasn't allowed to leave it. Now we have come into the range on that 10 in basically, let's just say July. So price was able to come down, come into that 10. The 20 is in now, so technically price can come to the 19,500 level. The 10 and 20 are both pushing down currently. This is a nice bearish candle. The low of the candle takes out all of this whole cycle basically. So we would expect more than likely another candle to go lower. On the 6-month cycle, again, when that 10 entered into the range, we had returned back to the 10. A little bit of a in and out, but once we entered in trend here on basically maybe February 2020, well, we went into trend. We had our nice trend cycle. We've now come into the range again. So we'll be looking for a price of 19,380, which would take us to the top of the all-time high of 2017. As of right now, we have the 20 above the range. So price, the body of the candle won't be able to go below 26,900 other than by wick. So we could see a nice long wick down into that 10,000 area, kind of like how this wick here is. So that's a high probability area. And you can see that's our 10,000 level that we were looking for back here. If I go higher than 6 months, I don't think there is any more data after that for the most part. I guess there is a little bit. So we do have the 10 coming into that range, and that 10 is sitting at 13,500. All right, so a couple more things we can look at for the crypto winter here is a chart that I made up a little while ago. However, I call it 16 degrees, but for the most part, you know, it did show the high for 2017. Did show the high for 2021. Now, if we do kind of go based just upon this, which, you know, isn't super accurate, but if we do go based just upon this and come down 3 levels past the first degree, which would be here, we're looking at, you know, the 11,800 area right in here. So we'll see how this plays out as well. And this is actually a really nice chart for levels. They seem to respect them quite nicely. And we can come into these pitchforks. And I'm not too sure which ones are good anymore for the most part. I drew these a long time ago. But, you know, this one's pretty nice. The mid-level, center level on this one here is, you know, 19,000, which takes us to the top of the 2017 all-time high. Coming into these pitchforks. This one's no longer in play. You know, here, if we came to the bottom, 24,000, not the greatest. A lot of them seem to be out of cycle now. All right, this one's actually pretty nice as well. Coming down to this band here, you know, we had our all-time high at this point here. If we did come down to the low, we'd be looking at, you know, 16,000, let's say. So this will be our long-term fib channels in here at the Pitchfork 13, 15, 17. So this one is really nice actually. Coming back this far back in data, it has more or less held all price in except for maybe a little bit here. The body's never closed below that line as well. We got that nice little touchdown for the 24,000 here. Center level, if we did come up to it, we'd be looking in around 124,000. Again, a nice little chart coming down to the bottom. Someone seems awfully close to that one. Another nice chart actually, showing the all-time high, 2015, or not all-time high, but 2017 all-time high, bottom of 2015. The heart attack level came down to this fib here. If we did come down to the bottom of this, we'd be looking in and around 10,000. We go for Christmas. So Christmas at the bottom of this fib would be 10,768 basically. So that's actually pretty nice if we, based upon what we're looking at off of this chart. All-time high, I guess, if we were to go up, we'd be looking at, you know, 270,000. So, you know, we could more or less 127 here, that kind of thing. Anyway. Those are the pitchforks. When I opened this up, I didn't even know what it was, to be honest with you at first, but you know, we have a descending triangle, descending triangle, descending broadening wedge, I guess. A little bit of broadening wedge here as well. We draw this out a little further now. Do it probably there. Now if we did come down to the bottom, we're looking at 17,000. Come up to the top, we're looking at 76,000. It's just below the midpoint of this, I guess. I'm not sure why this, well, I guess that line's drawn from here. You know, worst case scenario, 10,000. That would bring us to March of 2023. So I don't even remember when I drew this, but there it is. So I think that's all I got. We'll end the video here. Thanks for watching. Hit the like and subscribe. And wherever you are in the world today, whether it be morning, evening, or anywhere in between, thanks for watching.